Hi, hello, welcome to my channel Shankar Vlogs. So today we will discuss a new topic that is from the income tax. As we all know that income tax filing this year is within the month of July. So we will see how the gift tax is calculated for the financial year 2025 to 26. So, how many types of gifts are there, and how what is the threshold limit of the gifts, and from where the gifts are received, so that it will be exempted, and whether it is exempt, the gifts are exempted or not, or if there is any separate gift tax is there. We will see all the details in today's session. That is gift tax in India for the financial year 2025 to 26. So we will see the simple method of there is no this is a simple topic. So it will be it is easy to understand. So we'll go through the slides one by one, and it will be easy for understanding. And we will also see some of the examples while we navigate through the session. Okay. So, what is a gift? Gift can be anything. It can be cash, it can be jewelry, it can be shares, it can be immovable or movable property. Now, it is received through without consideration. So, a gift is received without consideration. So, it includes underpriced purchases also. So, the price can be less than the market value. So these types of all gifts are also included. Now, the gift tax applicable? Actually, in India, there is no separate tax for the gift. So, taxed under income tax. So, however, this gift tax is taxed under income tax, and it comes under the head income from other sources. So, while filing the return, you will see that in your form, income from other sources will be there ahead, and in that head, the gift tax is it should be filled up. So it should be filled up under the head income from other sources. Now, generally, the 50,000 rule is if the gift is less than 50,000, then there is no tax. If the gift is above 5,000, then the gift is taxable, and the taxable amount is the total purchase of the total price of the gift. That is, if the gift value is 55,000, the tax of the gift it is applicable to total 55,000. So like that, the gift is taxed. Entire amount is taxed if the value is above 50,000. Now, here gift from relatives. This is a special case. Whenever there is a gift from relatives, it is a tax free. There is no upper limit. So it can be any amount. So there is no tax for the no tax for the gifts received from relatives. The relatives includes parents, brothers, sisters, and brother-in-law, sister-in-law, and spouses, and any grandparents, grand siblings. Like this, the relatives will be included. So within the family, within the ascendants and descendants, and also within the relation of spouses. So gifts from relatives are tax free. So there is no tax for these when the gifts are received from relatives. Okay, and there is no limit also. It can be anything, but there should be. It is better to keep a record. Gift deed record should be there, such that it includes what is the gift, what is the value, and what is it, how it is transferred. So a gift deed should be maintained so that it will be useful for the if there is any uh, scrutiny from income tax, then it can be shown. Like that, a gift record is it should be maintained for safety purpose. For so for your safety purpose only, it's better to maintain the gift deed. And as we see now, gifts from others, gifts from others, it can be from outsiders. So as we said, 50,000 rule, it is applicable here. Gifts from others. So if the gift is above 50,000, it is taxable. The total gift price is taxable. It includes that is others includes friends, colleagues, or neighbors, or anything that is outsider, not in the family member. That is outsider. The entire amount is taxable. So gifts from other people are taxable. Now there are special exemptions here when we receive gifts on certain occasions. The occasions are marriage gifts. When there are marriage gifts, it is a fully exempt gift. And some inheritance and will. When there is a property given to son, then it is tax free. That is there will be no taxation of the gift. That is, it is exempted. Like that, inheritance will and some of the trusts and institutions. Like you see, charitable trusts and universities and some panchayats and municipalities and some institutions. If you receive the gifts from these institutions, there will be no tax for these gifts. They're totally exempt. So there are some special cases where tax is exempted on gifts. That is on marriage gifts and on inheritance bill that is written and trusts and institutions received. Okay. Now there are some property rules. That is when the property is given as a gift to others, there are some rules where how the tax is calculated. That is based on the market value. So it is a free property. When it is a free property, it is taxed under market value. So it will be taxed under total fair market value. And when the price of the property is low price, so the difference is taxed. That is a market value minus purchase price. The difference in the amount of market price and purchase price, it will be taxed. The amount that difference will be taxed. And this property rules applies to gold, shares, land. So these are the properties examples. So like that, these property rules are also taxed under certain rules. Okay. Now, clubbing rule: gift may be tax free. Income from the gift may be taxed. See, like we have seen, a gift may be tax free, like only in the case of relatives. So when you receive 10 lakhs rupees from your parent, for example, it is a totally tax exempt. There will be no tax. Okay, but if you generate if from the 10 lakhs, if you keep in a bank and if you deposit it, there will be interest generated, and that interest is taxable. The for whom that interest is taxable is it should be sometimes taxed to donor. So whoever donor is there, that is gift whoever will give the gift, that is donor, he will be taxed for that income. So whatever the interest that is generated through the gift, it will be taxed to the donor. And now some important points. That is, we have to maintain documentation. That is, we have to keep a record of gift deed. It is very important. It is very important for future and many of the income tax income tax inspections like that. We have to maintain many the gift records for our safety. And bank transfers are the most suitable for these gifts transactions. So it is suggested to do bank transfers for the gift types of transactions. And we have to see also exemptions. We have to undertake, we have to understand exemptions. So what is exempt? How the gift is exempted, and in what circumstances the gift can be exempted, that we have to understand it, and then we have to maintain the gifts, and whether it is taxed or not, we have to plan accordingly, and we have to file the income tax. Yeah, we have to file this income tax return. So now the summary is 50,000 is a key rule. So the 50,000 is a key rule, as all of us know. 50,000 is the threshold for the gift. If the gift value is above 50,000, it is taxable. If the gift value is below 50,000, it is exempted. Tax is exempted. So family gifts are tax free. So others are taxable. So only family gifts are tax free, and others gifts from others are taxable. So like this, we have seen gift tax in India, how it is taxed, and how it is received, and how can we avoid, and what are the ways, and how it is how in what cases the tax is exempted, and in what cases the tax is calculated. Like that, we have seen today's session. So today's session is gift tax, and then we will meet on the next session with another interesting topic. Till then, bye. Thank you.